Good morning, everyone. Today we have a special guest. I have Sal Tomaselli
Good morning. Good morning.
and also Valentina.
Good morning.
She's a development site for his company. And
Business development.
business
manager.
development on it. I know Sal for many years, and we have, I think, very good report. One of the things I can always count on his stuff that he will deliver. Recently, we had a case. I couldn't get a loan done. I tried different scenarios. The guy had a private mortgage, and that was the co-op on a condominium, and also the finances were very low on it, very bad.
Yes,
and,
I remember.
No one wanted to do the deal because of the building was in bad trouble. And what happened? Sal got the stuff done. So I think also he has a great team in the office, very easy to work with.
Thank you.
Before we even go on, I want to ask you a question. Why did you get to the mortgage? What was the reason?
Oh, wow.
Yeah.
So I started a relatively short time ago, Marek. First of all, I want to thank you for
Thank you
inviting us
actually
tonight
for
and having
coming in.
today and having us come into the office. We love working with Trademarco. It's a long-time relationship, which is great. So hello, everybody. My name's Sal Tomaselli. I'm the owner of Professional Mortgage Solutions. I started in 1987. After college, I got my real estate license, and I was a realtor for a very short period of time, 2 years. I immediately developed an affinity for financing, and in 1987, I started my first mortgage brokerage firm with a partner, and then eventually that partner and I split up, and then it morphed into Professional Mortgage Solutions, which has been around since 1997. So we're in 2025, we're about 27, 28 years into it. So I really love the whole financing side of things. So you mentioned that commercial deal that we handled for you, and it was a bear of a deal. It was a difficult deal. It didn't meet any of the standard, it wouldn't fit into any of the standard financing guidelines. And what we did was we went out and we got basically what they call non-warrantable financing, and we were able to convince a lender to lend on it. It was a complicated case. The client owned 5 units in the same building. There were defaults in the building. There were people that were behind on their maintenance or their monthly payments to the entity. So financially, it was a disaster. And most lenders don't want to touch that. And we were able to get a lender that understood the value of the units, irrespective of the current situation, because the current situation will change and the client will fix it and the management will fix it. And so we were able to get him financing and get him out of a very high interest rate loan. If I remember correctly, he had a private
he had
mortgage.
a private mortgage, and basically he would start paying tremendously penalties
Right.
on it. It wasn't beneficial. So.
Yeah, so that's one of the things that we do. We've been described as kind of a boutique mortgage of operation, right? That happened to be one of our commercial. I know today's podcast is focusing on the commercial end of things. So we basically have 3 large buckets that we do in professional mortgage. We have our residential finance, the standard 1 to 4 family financing, co-ops, condos. And then we have the commercial bucket, which is the loans you were just describing. And that's a loan where we deal with a whole different set of lenders. So we deal with about 36 lenders on the wholesale basis. And our third bucket is really for seniors, and it deals with reverse mortgages and getting financing for seniors. Only because a lot of our clients, because I've been in the business so long now, I have a lot of clients that are aging out, so they're getting older, and then they need money, and they come back to us for money, but they've done some estate planning and stuff, formed trust and various things. So we developed the specialty in the residential side, the commercial side, as well as the senior financing.
So you handle practically everything.
Pretty much. We go from first-time home buyer to your last house and any investment properties that you may acquire along the way.
And you are mortgage broker. Can you just emphasize the difference between broker and the banker?
Yeah, it's really simple. I mean, I'm in this business 28 years, and I've had many opportunities to transition to a bank. However, once you transition to a bank, you really limit your options. And one of my philosophies, personally, is to give clients as many options as possible and have as many outlets for them as possible. So I really don't want to be restricted. So each lender each bank, I should say, has their own niches that they focus on. And then there's a misnomer in the industry where people think, if I go to Citibank, they could do any loan of mine. Well, yes and no. There are certain loans that they won't do. They won't tell you that, right? So what I do as a broker is I match the client with the best possible source on the lending side. And at the same time, because we handle the origination and the initial intake of the file, the structure of the file, and the processing of the file, we get a discount from the bank. So it doesn't cost the client more to work with us. It actually, many times, it costs them less. I consistently beat Chase Bank. I consistently beat Bank of America. I consistently beat Citibank, because what we're able to do is we're able to really find the lender. We deal with large wholesale operations, nationwide companies. Some that you may know, like there's one that's very popular right now, United Wholesale Mortgage. There's another one called Rocket Pro. It used to be Quicken. Those are on the residential side. On the commercial side, we deal with a lot of local lenders that specialize. With commercial, what we find is that there's really a local market for that. It's much harder to go out to a nationwide lender on the commercial side because a lot of the commercial underwriting is very specific to the location.
And also to the product, right?
To the product. And so, yes, every bank has a very niche-y type of product line. I just had a client, he's a builder. He has many properties that he built and they're already built. And he called me up with a problem. He goes, I got to raise $5 million. And I said to him, okay, well, you own all these properties. I happen to know his portfolio, what he has. And I said, do you want what type of finance? He goes, well, I'm looking for a line of credit on my commercial mixed-use properties. Not an easy product to get. For those that are not in the business, it's very, very difficult. Not only was I able to find him a lender, but I found him a lender that was priced really very attractively. So what we're able to do is we're able to find those niche programs for clients, because a loan like that in a typical lender, they're going to charge about in today's market, about 9.5%. I found him financing at 6.5% on $5 million on a revolving line that he can use again and again and again over the next 5 years and then renew with the bank. You know, we provide solutions like that for clients. And I know you have experience with us, you know, with your clients.
You do a lot of things out of the regular comfort zone on it. You oversee personally a lot of times the clients from the beginning to the end.
I can't not be hands-on, Marek. I have to. I just introduced my daughter Valentina, and she's just graduated from grad school.
Thank you.
She's now working at the company, and we're very excited to have her here. But I still am very motivated to be hands-on, and now what I'm doing is I'm handing off some of my responsibility to Valentina to build up relationships, you know, because I'm really still focused on the deals. I'm focused on how do I get your deal closed and make sure it goes through. Failure is not an option.
I know Valentina, she's been trying to set up the appointment with our office for lunch. First of all, I don't know who is Valentina.
No, she's relentless. She's not going to let go, Marek. But we're trying to build relationships, not only with our clients, but also with our realtor partners. You know, because we have a track record together. But we're trying to expand our network to other realtors to show them, hey, we're a really good, viable option for your clients because I know how important it is for you to close a transaction. You know, people say, you know, oh, realtors make this percentage on commissions. It takes a lot of time, a lot of showings, a lot of work. I mean, I know you might work with a client for 6 months, 8 months, 12 months, and not make anything. And then finally find them a solution and find them a property. And then you have another problem. You got to go get financing.
Yeah,
you know?
Sometimes we take person for the showing like a year.
Right.
And next thing you know, she buys the property through another broker.
Right. Which is like a stab in the heart.
Stab in the heartbeat.
So we understand how important that client is.
Yeah, we want to have the stuff delivered. So the people will refer you, you know, for the next person. So reference to the commercial lending. So you have different lenders for different products sometimes, different locations, right? Like
correct.
You have like a mixed-use buildings, you have apartment buildings.
Yes.
Offices. So there is a different bank who is willing to take those clients, right?
Yeah. So if you want to do a high-level overview on commercial, you know, you just described it perfectly, right? So there's multifamily, which is anything that's really 6-family and up. So we've done 44 unit buildings and big, large projects. And then you have the mixed use bucket, which is usually a store plus apartments. That's called mixed use. And then you have straight commercial, retail commercial. So we've done all of those type of loans before. And each one of those loans has specific lenders that fall into the niche. And we just happen to have relationships with all of those type of lenders. So when you come to me as a client and you say, hi, I'm buying these 2 mixed-use properties, I know where to take it. I know how they're going to calculate the income. I know you're going to talk about how to calculate income on the buildings and how it works. And what's really exciting is in the last year or so, new programs came into the marketplace, which make it a lot easier to get financing. There's something called DSCR loans, which stands for debt service coverage ratio. And those loans have really fast-tracked the commercial financing in a lot of ways. So those have been really, really instrumental. I just got off the phone with an attorney who's buying an investment property, and he's got income, but he's got a really complicated situation. And I said, Mark, let's do a DSCR loan. The cost differential is minimal. Right now, they're neck and neck with full doc pricing, maybe a 0.25% difference. I said, but I can get your loan closed in 3 weeks. So my focus is, and our focus is as a company, is to find solutions that dovetail well with you as a realtor, to get your deal closed so that we both look good. You look good, I look good. We have a happy client at the end of the closing because we took a very stressful process and we made it very easy.
Usually, we either represent the buyer or either we represent the seller. And when we represent the seller, sometimes I got a building, and first thing I usually do, I call Jay or Sal just to find out what's the loan they can get, what's the availability usually on it. For example, if you have a vacant building, that's completely vacant, you have 2 apartments in the store, who can lend on the building. If it's possible, if the guy has to go full cash on it, take the refi. So before we put the property on the market, and we usually consult because we don't want to waste any time. And the guy is calling me like, I have 10% down and I want to buy the property. I don't have a business. It's not going to work on this type of building.
Again, there are exceptions to that.
Yeah.
And, we're doing a loan right now for a client who purchased a restaurant. And he's an owner user. And typically in the old world of financing, he wouldn't have been able to get this refinance that we're doing for him right now. And there's SBA programs.
Yep.
And because he's operational, and he's only been operational for about 8 months, but he is very well-versed restaurateur. He's killing it. This client is depositing $140,000, $150,000 a month in receipts. And we were able to do a 3-year projection out for him. He only owned the building 8 months. And we were able to refinance it and reduce his interest rate by almost half.
Really?
From private financing that he initially took to where we're getting him. So we provide those type of solutions for clients.
That's a very good point on it. If there's an operator who wants to buy the building also, the building is vacant on other stuff, and you can use SBA loan just to get into that building for that operator.
Right, and there's ways that we could apply market rent to those vacant units. And, in the past, that wasn't an option. Lenders were very strict, and they would say, you have to get the place rented out first. And now, in today's world, we have options where we can put them with lenders where they will just take market rent in spite of the fact that the place is still vacant and not cash flowing, and get your deal closed. So there's a lot of flexibility in today's financing world, a big appetite for solving these problems.
So I had the guy, he did the SBA loan. He was a dentist.
Yep.
And he bought a building. And another guy also did the SBA loan on it, which is mostly for the owner user. As you said, the income, like that person who runs the restaurant was depositing $140,000 monthly, right? Or monthly. He's doing great.
His place is packed. He's a good restaurateur. Yeah. But most banks won't give you a loan for 2 years after you open. And we were able to solve his problem. He's only open 8 months.
Wow.
We had the numbers. We had the data to provide the bank.
What do you think about the rent-stabilized buildings?
Talking about in general or New York City?
No, I'm talking New York City. We actually here on it. So the lending process for rent stabilized building is a little bit different, right? Yeah, they need a
Yes.
more cushion. It's not like a ratio 1-to-1 or 1-to-0 on it.
There's been many new laws
Yes.
passed by New York City, which are designed to protect tenants.
Sure. You don't want to pressure tenants. They're there to help them. Yeah.
So New York City
Yeah.
has some pretty onerous rules, and they've kind of created very tight boundaries for landlords, right? Unfortunately, some values have dropped on rent stabilized buildings because there's very little upside at this point in time. So it's designed to make New York City more affordable. We're sitting in Ridgewood, New York right now, and there's buildings, there's multifamilies all over the place here. There's people that have paid $1.3 million for a 6-family, and now it's worth 900 or 800 because of these new laws. I think coming into the marketplace at this point in time, at this juncture, where the market values have been reset, is interesting. I owned a 12-family building, and I was getting offers in excess of $2 million. We ended up selling it at about 1.7, right? Because we were being offered 2.1, 2.2, and we declined those offers, and then the laws changed. And we took a $500,000 haircut when we sold the building. So I think there's an opportunity right now. There's opportunity for new buyers to come into the market, buy up these multifamilies and these rent-stabilized buildings, but they have to deal, unfortunately, with the extra layer of New York City.
Yeah, you have the documentation.
DHCR, and I think you're pretty well versed in that, right, Marek?
Yeah, we actually do a lot of multi-units buildings for sale. We do cost analysis for the guy who's coming to buy the building, what his projection is. We can run, you don't get that much increases on those, but the taxes, everything's going to go out. And instead of analyzing from the cap rate, we did it before, but we started doing on a cash flow basis. If he's coming in, investing like 800,000, meanwhile, he gets cash like maybe $40,000 per year net to him after taxes. And he sells the building. We do the projection 5 years forward or 10 years. His rate of return is 15%, on it. That makes sense.
I know you're very well versed. You recently got a designation.
Yeah,
what was
thank
the
you.
commercial designation?
Yeah, CCIM.
CCIM, which
Yeah.
is a great accomplishment, brings a lot of expertise to the table. I love dealing with realtors that continue their education. We're heavily involved in re-educating ourselves always, and it's
There's
great to
always
see.
something new.
You're not complacent. You're learning and you're building your practice, right,
Yeah.
as a realtor. It's all about ROI, right, return on investment. When we start dealing with a client that's new to the rent stabilization market, I kind of like to refer a guy like you because you can explain to the client, look, there's an extra layer of responsibility, of filings that you have to do. There's all these local laws that deal with lead paint, smoke detectors, all the signage that you have to post, all the bed bug reports on an annual basis, the annual HPD filing. It's just this like laundry list of extra stuff you have to do. Parapet wall inspections, gas piping inspections. Gas detectors now are a new one, that the city is requiring. And there's so many agencies. You have multiple agencies that are putting all these laws into effect. So you have to comply with HPD, DHCR, the New York City DOB, ECB, all the agencies. You can't walk into that lightly, as you know.
It's a process, but as you mentioned, you're buying 6-family building for 800,000 instead of 2-family building for 1.5 million, and then you have to see what's better. And in the meantime, you can get maybe 1 unit or 2 unit vacant.
Right.
So you move into the building, like
Right.
back in the old school, like in 90s.
The old days.
The families came in, they were getting income from the rentals, and they were able to afford 6-family, 10-family building.
I'm sure my daughter would love a rent stabilized
Yeah.
apartment.
That would be my dream.
Live in it helps to pay for the mortgage, everything else.
And you got a set of eyes in the building.
Yeah, you see, that's a beautiful thing. We have buildings 800,000, 900,000, 2 units vacant, but the income, you go back and forth on it.
I would like to mention that the way banks calculate, you were going to probably get to that, but there's a process by which the banks calculate the income. And it's done very differently from the residential side to the commercial side.
And also, I'm going to tell you one thing before you go in. If you get a report from the broker, this is the income, they usually skip a lot of things what banks
Yes.
look into. When you buy in the rent stabilized and looking the commercial building like a retail, that's completely different.
Right. You have
So-
to really know
Yeah.
what you're looking at and know if the numbers being presented are accurate. Like
Yeah.
some numbers you could verify easily, like
Sure.
real estate taxes. But there are other numbers like insurance. There's a big disparity in insurance. You can go to one broker and get a quote for $6,000 per building and go to another broker and get a quote for $9,500. And that is your profit margin right there.
Yeah.
When a client calls me, the banks look at two things. They look at the collateral, right, which is the property. And they also look at the operator. Does this person have experience, right, in managing retail, in managing multifamily, in managing mixed use? What's their experience level? They kind of look at who's our operator, and they look at their finances, right? And sometimes they'll look at the global cash flow of the individual if they own a lot of property. Or are they a first-time commercial person that's buying a property, and do they have the wherewithal to manage something like this? Do they have the capacity? And they're going to look at who that individual is, right? And what their abilities are. And so the starting point is I try and get what they call an LOI for a client, which stands for letter of intent. So the way the commercial market works is we gather the information on the building. We gather the information on the individual. We run the income and expense. We do our calculations. We come up with a number that we tell a client, okay, the bank is probably going to lend you somewhere around $800,000, $1 million, $5 million, whatever the number is. And when we send all that information into the lender, once that goes into the lender will then determine their appetite for this type of loan. So they're going to look at the location. They're going to look at the businesses that are in there. In the past, for example, dry cleaners have been a problem. So because they use chemicals, right? So the question is do they dry clean on premise or do they dry clean off premise? Is there a risk here? Is there a hazard? So what we do is once we get all that information and we send it into the bank, we get something back called a letter of intent. So at that point, they'll either say, yeah, we're interested, or no, we're not interested. What I do is I send out that package. It's a lot of upfront work, right? Because I have to fill out applications or packages for multiple lenders. So I'll usually take the top 3 or 4, and I'll send out this package on your client to all 3 or 4 of those lenders, and I'll get back letters of intent.
But you first have to get information about the client, right? As you mentioned.
Yes, we have a preliminary discussion. There's an easy route and a much more traditional route. The easy route is they go off the income of the building. They really don't look at the client that much. And there's a slightly higher interest rate for that, but not much, not a big differential. The traditional route requires looking at 3 years of tax returns, looking at their personal financial statement. So they have to create a personal financial statement. Most small investors don't have a PFS, a personal financial statement. So we help them with that. We work with their accountant. We have them help them draft a PFS, right? We run a credit on the client. And so that on the client side, that's what we're looking at: their tax returns, their personal financial statement, and their credit report. On the building side, the bank is interested in the cash flow of the building. And is it going to be an owner occupant, so a guy who owns a restaurant, right? Or is it going to be somebody that's an investor and says, I'm going to rent this place out? Because it's 2 different risk levels for the lender. And every bank I have lenders that like owner occupants, and I have lenders that don't like owner occupants, and they'll lend 5% less. I have one bank that'll lend 75% to a regular investor. But if you're going to be an owner occupant, they're only going to lend you 70%.
Really?
Yeah.
It's
So,
vice versa.
and which you would think is very counterintuitive, because you would think, okay, if they're going to be in the building, they're going to take care of the building. It's going to be their baby. They're going to take care of it. But this lender has a different philosophy. So we have many lenders with many different philosophies, right? And so what we try and do is we try and pair or match the client to the correct lender that's going to give the path of least resistance with reasonable terms. So that's what we try and do. So we gather that information. We get a letter of intent. The letter of intent is basically, you're still not approved yet, but the bank says, we're interested. We will offer these terms if everything you told us was correct. And then at that point, we present that to a client. So I might get 2 to 3 letters of intent per client, and I'll say, here's option 1, here's option 2, here's option 3. Once I give them their options, and then I'll guide them and I'll say, I like this option because it has a shorter prepayment penalty, or I like this option because the interest rate is lower, or I like this option because your overall monthly payment is lower. So that's basically, I guide the client accordingly, and then we figure out what's the most important to the client for that specific scenario. Because what's important to you might not be important to the client. Once the client makes a decision, then they sign the letter of intent. They give a good faith deposit, which usually covers the cost of the appraisal and any kind of environmental screenings that have to be done. And then we start the real work of doing the application. So it's pretty
intense.
It's pretty intense. There's a lot of work involved just to get to the LOI. And then when it gets to the submission level, we're kind of resubmitting a lot of the same documentation again, but then it gets more intense. Then they want to see the leases. Then they want to see the survey is usually always required. Then we start providing a lot more documentation to the lender. And then they send out their appraiser. We do a phase 1 environmental sometimes if they require it. So there's a lot of work involved in getting to that point. And then once the commitment conditions are met, then we go to closing, obviously.
And that's the very smooth process. But in the real world, it's a lot.
It's a lot, and it takes some time. Like traditional commercial lending could take 60 to 90 days to finance a deal.
Like you mentioned, environmental, phase 1, phase 2, sometimes is required. I remember one time I was showing the property to investor, and I found a very nice building. Back in the day, Valentina, they didn't have the Google view, so I didn't check where is it located. So we pulled up to the building, and it has a very nice income, projections. But what happened? Next to that was a gas station.
Yep.
And the guy says, no, I'm not buying.
Right.
Because maybe there was a spill, something from the tanks. You learn it later on.
You got to buy it uphill.
Yeah, you got to buy it uphill. So next building, I showed the guy, there was not close to the gas station on it.
We've had commercial properties with benzene. I had a tire place that was adjacent to a gas station. Not even adjacent. It was really 300 yards away, but it was downhill. That's why I say you got to buy uphill. And the gas station tanks were leaking, and they did a phase 1 on the tire place, and they had benzene in their soil that was coming from the gas station. So it's a really complicated problem, because then, it really makes that property somewhat unmarketable. And then how do you fix someone else's leak? Yep. So there are some nuances to buying commercial property that you have to be aware of, which I know you are aware of, but that, you got to translate that to the buyer.
Yeah, and the difficult clients you had, difficult cases, what you run into?
We've had some interesting clients over the years.
Expect the unexpected. There's something new comes up.
There's always, everybody always has a twist, or everybody always has something there's some component. Usually the type of transactions that we see a lot of, a normal bank will turn that client down, and then they'll come to us and they'll say, hey, sometimes they'll say, I have a problem and this is the problem, or they won't even disclose the problem, but we uncover it typically, and then we work in conjunction with the client. Our number one goal is to get the deal closed, right? And so it's really incumbent upon us to solve. That's why our name is Professional Mortgage Solutions. We find the solutions in the deals. We have to find a solution for the client, for the realtor, for our referral partners. So we always try and get tough deals. We find solutions to the tough deals.
Yeah, I know for facts. I always can count on the Professional Mortgage Solutions.
Thank you.
All the time. Valentina, how did you get involved with your dad on it? That's a tricky question. Maybe I don't want to overstep it.
So for me, I've always had a passion for marketing and business developing. I actually have a background in fashion. That's what I went to school for and got my bachelor's and master's degree in.
My wife, actually, a fashion designer.
Oh, very
She
nice.
went to FIT.
Oh, me too. I went to
Really?
FIT as well.
Yeah.
So after getting both my degrees, I decided that I was still interested in something in this kind of industry. It was more practical to me. work-wise, while fashion is more of like a passion or a hobby for me. My dad has always had this company, and I'm very good at marketing and developing the business. He's very good at creating the deals, so I felt like we made a perfect team together. So far, it's been going well, and I'm really enjoying it.
No
So,
obstacles, right?
no,
No, she's bringing us to a new level, Merrick. We're introducing new technology, social
Which is
media,
good.
various things that I'm really not good at and she's good at. you know,
Yeah,
so.
that's perfect. You're just actually helping each other and the business growth.
Hey, man, I want to retire. I want to retire and pass this over, but I can only pass it over knowing that
Yeah.
it's in good hands and that Valentina learns. So the next 5 years, 10 years, I want to make sure she learns this business. The funny part is I've been doing this so long that I've seen the same things come around because it cycles around. And when someone new comes into the picture, they see things differently. But there's also some fundamentals of things that just repeat themselves over and over. So it's kind of like the perfect mix. You have the new technology, new set of eyes on the business, and then you have the old school guy that's like,
It's perfect. Like she brings new side of lens. Like,
exactly,
basically.
exactly. I love having her with me.
and I love working with him, so it's a perfect pairing.
Yeah, that's perfect. And what would you recommend for the new investor if he wants to go for a loan? What they have to do?
I think a couple of things really. I've dealt with some really successful investors, and my most successful investor, one guy drew a little circle in the palm of his hand, and he says, "You see this?" And I would say to him, I said, "Why don't you go to Florida? Why don't you go to North Carolina?" He was Sam the Glazier. He owned like half of Bushwick, and he drew a little circle in his hand. He unfortunately passed away last year, but he built a real estate empire. Essentially, he drew this little circle in his hand. He says, "Focus, focus." My number one advice to investors are really focus on a specific area. If you're going to go into multifamily, go into multifamily. If you're going to go into mixed use, go into mixed use. Because once you learn those nuances of real estate, it's like medical profession. You know, you have brain surgeons, you have podiatrists, you have heart surgeons. You don't want a heart surgeon operating on your brain, right? And you don't want a brain surgeon operating on your eyes. You want a specialty. So I think my number one advice to new investors would be to focus on a segment of the marketplace. I have a group of doctors that have purchased 40 houses in upstate New York, all single families. And they've amassed 40 homes over the course of 7 years. And they bought those properties really inexpensively. And each property is kicking off about $1,000 to $1,500 a month profit each.
Wow.
Okay. So if you do the math, every month, these guys are getting pretty nice checks, they're profiting each. There's 4 partners, and they're probably pulling out about $10,000 a month each, and they're managing 40 properties, but they're all single families.
And that's what they've been doing.
Yeah, they have a manager up there, and they have they bought a guy a house, a cheap house. He's got a snowplow, and it's Albany, New York. So my recommendation to the new investor coming into the marketplace is to really stay in a very narrow niche, become a really good expert at that. It could be 2-family homes. It could be 3-family homes. It could be mixed-use properties. It could be multifamilies. Stay in that lane, learn the nuances, learn the rules and regulations specific to that property type, and just repeat, and just keep buying the same type of property.
Yeah, I think that also pertains every business. Yeah. When you do one thing, just gonna do the thing. No,
Specialize
don't spread out.
Right. And I think that's where I've seen the greatest jump in net worth, and I've seen the greatest success with clients when they focus. And it seems so simple, right, Marek?
Yeah.
It seems simple, but people say, "Oh, I'm going to do this. I'm going to buy here. I'm going to buy a condo here, and I'm going to buy a house in Florida." And it's hard to manage all that when you're so spread out and spread thin.
Yeah, you have to stay in one lane, basically. Same thing with us. We don't do property management. We don't do another things. We focus on multi-units, or either we also have a residential aspect. Small, I have few agents doing that. Primarily, I always want to go into commercial stuff. That's from
I know that's your passion.
Yeah,
that's your
my
passion. So
and,
you're good, and you're good at it. So you guys have to come see Marek, Trademarco Realty.
Thank you.
Yes.
He's a professional. So I endorse Marek Sobolewski. He's great.
Also, if you're going to go for a loan, you got to stop at his location. Where are you guys located?
So we're located in Rego Park. We're at 6279 Woodhaven Boulevard. Been there on that block for 28 years. All our consultations, our initial consultations are free. There's no charge. We want clients to come in, sit with us. You don't have to. We can do everything on the phone. We can do everything electronically as well. We're pretty well versed in that. But we want to build a rapport with the client. We solve your problems. We guide you accordingly. And we have a great team of people. We have our origination staff. We have our processing staff. We have our closing. We're a small office. We're 7-8 people. But we have it set up in a way where it really works, it functions well, and you're not dealing with a big bank. You're not going through voicemail crazy where you have to leave a message on. You can get to your appropriate person. We're going to pick up the phone. We're going to talk to you. We're going to answer your questions. We're going to solve your problem.
Awesome. So I think that sums our podcast, our video today. I
Thank you.
appreciate this is just the beginning, like touching the iceberg, not the iceberg.
Scratching the surface.
Scratching the
Yes.
surface.
Well, listen,
Iceberg, that's a Titanic. We all gonna sink.
Well, the cool part about the iceberg is only you see the tip. You don't see everything else underneath. So,
You're behind.
I called my wife an iceberg. I said, there's a lot underneath there that you don't see. But essentially, I want to really thank you for inviting us in. It's really
It was a pleasure.
Great partnership. We
Yeah.
love working with your office, with your team. And we really look forward to working with any of your clients. So
Awesome. Thank you, Sal. Thank you, Valentina.
Thank you so much.
thanks,
Eric.
Marek.
I see you. Bye.
Bye-bye.
Bye.